How are you? How are you this morning?
I'm wonderful. And yourself? It's Friday.
Yeah, not too bad.
Couldn't be better.
Had a great happy hour yesterday. Huge turnout.
Nice.
Pretty stoked about that. We had 40 agents in attendance.
Awesome. Next time I'm coming along and I'm going to talk about credit.
There you go. Credits. I'm so surprised at how many people don't realize how flexible and malleable credit is. Like, a lot of people think if they have, 560 or 580, they're not buying a house. And the reality is, you're just not buying a house yet. And that's one of my favorite parts about being here at Southern Trust is having you and being able to review people's credit and give them that guidance.
Yeah, I was teaching a class yesterday, and I had an agent tell me that her lender doesn't do any loans if it's 620. They won't help her buyers. And I'm like, what? And then I went on to show her.
Like 620 minimum? Or?
She has buyers with a 620 score, and the lender's not helping her.
Wow.
So I said, please come our way. We'll be happy to help you. And
Absolutely.
then I showed her an example of a score that was 491, and we got it to 620 and closed it.
Wow.
So it was eye-opening to her. And you said it's surprising to you that people don't realize. What's surprising to me, and really not surprising anymore, is that nobody knows about credit. People don't teach it. You know, they really need to teach it at the high school level in a financial literacy course of some type. It's because, people don't realize. Little tiny things can have a huge impact on your score. And, everyone's looking at scores now. Yeah. Whether it be for a car loan at zero interest. You don't get that zero interest. The fine print says, right, provided your score is 740 or higher or whatever. So, there's just so many little things that you could tweak to get that zero interest on your car loan. So, yeah. And everyone's looking at scores now. And the reason is because these scores are a great prediction. Not a report card, but a prediction on how someone will perform. And they've been collecting data way before they came into the housing industry. Scores were around. So they're very accurate predictions. And that's why so many folks put so much weight on these scores.
You see people say things like, I didn't agree to, Sprint says I owe them $200, but, I never signed that contract. Screw them. I'm not paying them. And it's so crazy to me because, you stiff Sprint out of $80, but now you're paying, $30, $40 more a month in interest on your mortgage for the next 30 years. But being able to guide people through, fixing those past mistakes, or just like, the little nuances of credit. You pay down this balance, and then next thing you know, your score jumps 40, 50 points. I actually have those examples that you sent me. I want to pull them up with you.
Yeah, and you say while you're doing that, paying down a balance, I would say over half the time, if I'm recommending someone pay a balance down, they've already paid it down.
Yeah.
And it just hasn't hit yet.
Yeah.
And their score is not really accurate.
Yeah.
Take those folks that pay their bill every month. They use the same credit card for rewards, travel rewards, cashback rewards, but they pay it every month. Well, it's hit or miss. We pull their credit. It has that big balance because they use it for everything. But they pay it every month. So their score is not really reflective of that being paid every month. See what I'm saying?
Yeah.
So I reach out and say, hey, pay this down to 30% because that's the key line you want to be at. And they're like, I already paid it. I pay it every month in full.
So 30's 30% is better, 10% is best. Is that right?
If we can, it depends on the situation. If there's 4 credit cards that are maxed out, if we can get to 50, we're going to get an increase. If we can get to 30, we're going to get a nice increase. Obviously, we can get to 10, even better. Buyers usually don't have a lot of money. They wouldn't have those balances on their credit cards if they could get them to 30%, right? Plus, they got closing costs, down payment.
Right.
There's 4 or 5 ways to get to 30% with no money.
Do you want to talk about that?
So let's say you have a Capital One credit card with a balance of, a credit limit of $1,000. Your balance is $900. You get a credit line increase. We get that new increase reported, boom, score goes up. Another way is you have 3 or 4 credit cards that are maxed out, one or two or zero, transfer the balances. Get them down below 50 or closer to 30. Then that to me doesn't make a lot of sense because you have the same amount of debt, but if you spread it out, your score goes up.
Go figure.
Another way is sometimes I find mistakes in the way these items are being reported. For instance, I've seen department stores report high credit, not credit limit. High credit is as high as you've ever been. Obviously, limit is as high as you can go.
Right.
So we get the limit reported as opposed to the high credit, and boom, the score went up. No money was needed. And then right now, there's some companies doing credit card consolidations and combining them. Even though you're getting a new account, which can be detrimental, you're getting rid of those credit cards.
And the utilization's dropping.
So that can have a good impact. It's funny, I was teaching in North Carolina not long ago, and I mentioned these 4 ways to get to 30% with no money. And an agent there said, I know a 5th way. I'm like, oh yeah, what's that? She said, tell the buyer to take back everything they bought on the credit card. That's not going to work.
That's funny.
She was trying to be funny, and it was funny. But but there are ways to try to address this credit card debt, because I can tell you, when we're helping folks out, if you go to My FICO, you'll see a pie chart, and it says 15% of your score is this, 20% is this, 30, and we have that same pie chart in our marketing materials. In my opinion, that pie chart applies to what I call consumer scores, the FICO 8, the FICO 9, not the mortgage models that we have to use in the mortgage industry that are FICO 2, 4, and 5. My mortgage score pie chart is 50-50. 50% bad stuff, whether it be a recent late, a collection, and 50% high balances on credit cards. If I'm doing what we call a rapid rescore to help a buyer get their score back where it should be, I'm addressing one of those 2 things 98% of the time.
And I love that we don't just do rapid rescores, to get you to qualify if you don't, which I think is unique to us. There's a lot of mortgage companies out there that if you qualify, they're just, they're closing you at whatever you're at, and not necessarily like the situations we've had where, you qualify, but, if you knock this or that out, your score is going to jump, and then we can get you a better rate, better loan terms, what have you.
Yeah, my magical number for everybody is 760 because you get an MI discount, and you're probably going to get a better rate.
Yeah.
So even if I'm at 740, I want to look at it and see if I can get 760. Like you said, some lenders will just stop. You're good to go. Some lenders stop at a 491 too. Most of them. But I'm going to look at it and see, I have 30 years in the credit business. So I'm going to look and see, maybe there's a mistake. Maybe there's something we can address. That 491, by the way, was a young lady who had a medical issue. And she went through a terrible medical problem. And we were able to help her get some of those collections removed.
Wow.
And we could keep some of them because, we can ignore medical collections in the DTI. So we left some, but we were able to clear up a lot of them and help her out. So, like you said, some lenders aren't going to help you get the higher ones up even higher, or the lower ones. They're going to give up on them right away.
And if you go to the wrong lender with a 491, the feedback you get could inevitably deter you from trying again. Mm-hmm. You know what I mean?
No doubt. I had a lady reach out.
It's no secret. Plenty of lenders will,
I had a borrower
turn cheek.
Reach out to me yesterday. I talked to a year ago, and I've taken a lot of steps to help my credit. Can you help me out again? So I referred her to a loan officer, and she's pulled their credit report again. And there's still some things we need to do to get her ready to buy. But it's been a year. And, she went through a terrible issue as well. So we're getting them back on. Sometimes it takes 2 days to fix it. Sometimes 2 weeks, sometimes 2 months, sometimes a year. It just depends on the situation. But a lot of times we're able to help these people quick and get them into a house pretty quickly with better terms than they were going to start out with.
Absolutely. Let's look at some of these examples, and you can kind of tell me what's going on.
Sure. So, yeah, I always start with the before. And
one of the three you sent me. So before we had 639, 638, 641. And tell me what we see here.
Okay, so what I always look at is these factors underneath each score, because they come from a list of 30-some factors that they are telling us these are having the biggest impact on why these scores are not 850, which is as high as we can get. And keep in mind, most people know every lender has to throw away the high score and throw away the low score. So we're left here with a 639 middle score, which is what we have to qualify the buyer on. Well, we were trying to get to 680 for a first-time home buyer grant and some other things. So when I looked at this report, it says there's a collection, all three of them is the biggest reason. And the second thing is proportion to balance the credit cards is too high. So what did I say my 50-50 was? Bad stuff and high balances on credit cards.
There it is.
Yep, so it's right there. And the Discover is over the limit. It's 529. Well, this buyer, what I do is I analyze it, send an email. Loan officer forwards that email so the buyer has it in writing. It says, hey, we got to get that Discover down to 30%. And this Bull City, they will remove it if you pay it. And I have 10 samples from Bull City. So I sent the loan officer a previous sample where I've whited out the buyer's information and account number, and I recommended getting the Discover down to 30%. Well, the buyer said, I already paid that down. Same type of situation where that was paid down. I said, get me proof. And again, clear up the collection and get me a letter. If you scroll down just a little bit, here's what we got. We got on March 30th of this, or 20th of this year, we got the Bull City letter, and and they emailed it to the borrower. You say via email, I've whited out the borrower's email, name and address and everything. It says delete. So they had to pay it, but they got it. And this was not medical, by the way. This was for a utility. And we got it deleted. And the Discover was paid, they got me proof that it was already paid down. So if you scroll down a little further, the after report a few days later.
Wow.
Look at that.
That's awesome.
So we're at 639 before. Now we're at, you can tell the folks what that does.
742.
What does that do to your loan terms?
Yeah.
Or your buying power?
No kidding.
A better house, a bigger house.
Your options open right up. Yeah, and absolutely a bigger house.
And look, the factors changed because, again, your score is calculated on the fly. It's not saved. Whatever, when we go in and pull it, it looks at what's there, goes through the formula, spits out these numbers. These numbers aren't saved. The factors aren't saved. So we go in and now it doesn't see that collection. It doesn't say anything about a collection. It still says there's a little bit of a high balance, but it's okay. Obviously, we got to where we needed to be. We're at a 742 middle score now by addressing those two small items.
So for all of, $200-300, 100 points in score, which opens all of their loan options up and, potentially, puts them in a larger, more buying power.
Oh, yeah, absolutely. I tell realtors this helps them buy a bigger house.
Yeah, absolutely.
Yeah, because the rates are better and they can qualify for more once your score's up.
Yep, higher score, lower rate, more buying power.
And this just happened in March of this year, so
wow,
that was a successful one.
And then I think we got one or two more here that I just want to click through with you. Let's see what this one is.
Yeah, so this one, the scores are a little better, but this was a jumbo loan, so we were trying to get to 760, and actually 700, 720, 740.
Somewhere in there.
Again, my magic number is 760. It says serious delinquencies and time since delinquency. A recent late can kill your score. I've seen one. You're not late until you're 30 days late on your credit report.
Right.
And I've seen a recent late drop a score 45 points. One late. You've been perfect for 20 years on this credit card. Now you have one 30-day late, your score drops 40-some points. So that's kind of the case here. If you scroll down a little bit, there's a mortgage with Select Portfolio Servicing and one with a Nation Star, Mr. Cooper.
Ooh, a mortgage late.
And this report, if you scroll back up, then I'll show you, it was from July of last year. Okay. The end of July. So scroll back down.
July
this
26.
late was May, 2 months prior, and January. So
Oof.
These are recent lates. Well, the buyer said this was transferred to here in January. It couldn't have been late. in January because it was you can see the loan amounts the same.
Yeah.
The servicing got taken over by Select Portfolio. So I said, well, get me a letter from Nation Star Mr. Cooper saying that January late should be removed. I said, what about the late with Select? That was late. I said, all right. Approach them and ask them for a one-time courtesy removal. It can't hurt to try. I've seen lots of creditors actually put it in their letter as a courtesy, as a one-time or whatever, to try to get that May late removed. Because as you know, a mortgage late in the last 12 months can be a killer.
Absolutely.
So go ahead and scroll down, and what the buyer got me. Here's Select Portfolio a couple days later.
The very next day, actually. Look at that.
As a one-time courtesy, Select Portfolio has requested the credit reporting agency suppress the information. So it can say delete, remove, suppress, expunge, any word that they'll give me to make it go away. And then they also got me a letter later from Mr. Cooper that says remove any negative from November through March. So they know it was an issue in the servicing
In the
transfer.
switching of
You know, if you
servicing.
sell your home, the title company, God forbid, forgot to get the payoff there in time and you're late on your last payment.
Yeah.
Sometimes we can get those types of situations fixed.
Good to know.
Yep. So down a little further, there's your increase.
Wow.
Recent lates. And if you scroll down, you'll see the two mortgages, the lates are gone. And what do we got now? 760. So we're in perfect terms
That's
now for
exactly
that jumbo
where we wanted to
loan.
be.
This was for, I think it was for Virginia Beach. I think it was, it was for right here in a Virginia Beach office, this particular loan.
133 points. No money spent. Just a couple phone calls and the right guidance.
Absolutely.
Awesome.
Yeah.
Awesome. I think we got one more here. Let me see if I can pull it up. That was 37 and 42. 37 and 42. Example 41. Got a lot of these examples.
Yeah.
All right. What do we have here?
All right.
We got a 677, 702, and a 681.
Yep. So we have a collection down the bottom for how much is it? $750?
Yep.
And you'll see the factors are all talking about that collection. They all don't like that collection. That's why we're not at an 850 score. Well, I have a bunch of samples from financial data that they've deleted in the past. So I told this buyer, hey, clear that up, ask them for a removal or a deletion letter. So if you scroll down, you'll see we got that letter February of this year, and it says deletion. Now, it says it might take how many days? 3 days? We don't know how long it's going to take for the credit bureaus to update. That's why we do a rapid rescore. So we submit this letter right. The bureaus let us know when it's done, usually within 72 hours. Pull a new report, and you'll see the result if you scroll down there,
And
Ben.
voila.
And there's that one collection got us over
Perfect.
720.
Nice.
So not as big increase as the others, but
Right.
still substantial. One collection, clearing it up, getting it. Now, if we were to just pay that collection, we might not get any increase. We might even see a slight drop in the short term because the activity is more recent. Got to get it removed if possible. In most cases, it's going to have a substantial, and you know, 40 points is
Oh, yeah. I mean, here, that collection.
what were we at before? Our middle score was 681. So we
Yeah.
got it over 700. We got it over 720 by getting rid of that one collection.
Absolutely.
Now, they had to pay it. You know, they had to come up with the funds to pay it.
Well, that's the thing. That collection, yes, it's $750, but if it saves you an eighth of a point or a quarter of a point when you go to lock your rate, you just got that money right back.
Absolutely.
You know?
And in the long term, you know, the money
Absolutely.
you're going to save on that loan.
Over the life of the loan, absolutely. Those are some great examples.
Yeah, and when I teach the Realtor CE classes or just do a lunch and learn, I did both. On Wednesday, I taught, this week, 2 days ago, I taught a 2-hour CE class here in Virginia Beach. Yesterday, I did an hour and a half lunch and learn, so it wasn't for CEs.
Oh, yeah, you did that with Sam, right?
With Sam.
How'd that go?
It was great. It was a great turnout and very good feedback. A lot of questions from the agents back and forth. Both classes very well, and heard from both brokers afterwards. You know, about how informative and things that they've learned and that they can pass on to their buyers, and hopefully we can help them in both cases. But so yeah, it could be a lunch and learn. Doesn't have to be. It could be a CE class. Either one. We're doing them everywhere now. So my class is actually my Realtor CE class is licensed in Maryland, Virginia, North Carolina, South Carolina, Washington D.C., Florida. That's 6. I think there's 7.
Wow.
So I might be missing one. So we're teaching all over. And
You picked up Florida just to fly down there, huh?
That's right. That's right. I have a son who lives in Florida, so it's a good idea to. In fact,
Absolutely.
we have a presence now in St. Augustine.
Oh, wow.
We have a loan officer, part of the Pat Miller team,
No kidding.
and she's in St. Augustine.
Oh, yeah, I've met her.
And my son is in St. Augustine, so
Awesome.
hopefully I'll get down there to teach soon so I can do a visit.
There you go.
But anyway, so we're teaching all over and trying to get the word out about some possible new changes to scores we might see in the next couple years, where we might go to 2 scores and may have more updated scores. As I mentioned in the beginning, we're using FICO 2, 4, and 5 in the mortgage industry.
You mean we in mortgages or the credit system in general?
In mortgages, yes.
Oh.
Yes, FHF, I can never say that, are looking to make changes within the next couple of years to just have 2 scores, and it would be FICO 10T and Vantage 3 or 4.0, which would be great because they're more modern scores that are looking at things a little differently. We'll have some information coming out about that, and I actually bring it up in my classes. I have a flyer on it that kind of explains some of the new changes. It'll really help buyers that, for instance, one of the FICO 10T doesn't count collections after they're paid. I'm talking about non-medical.
Wow.
As we know, medical now, when you pay them, they disappear.
Yeah.
And if they're under 500, they can no longer be reported. Well, these new models, if you pay a cell phone collection, the score won't see it anymore. So it's almost like it's being deleted.
I feel like that's how it should be. How do you feel? What's your take?
If you've cleared it up, it's something like a cell phone, things like that. Now, if it's a part of your payment history and it's a pattern, I think that should probably stay there. And lates stay there for 7 years.
Yeah.
If you have 5 lates, you're not getting a courtesy removal.
Right.
The only time you can really get a courtesy removal if you just have 1 late and you have a legit reason, some kind of reason why it went late.
Yeah.
And not all creditors will give a courtesy removal because that is part of your history. But a cell phone collection, I guess you're right. Once it's paid, maybe it shouldn't. It's still going to be on the report.
Yeah.
But the scores, the new models that we're hoping to go to, won't consider that debt, which is
good info.
Going to help.
Info for the future.
Now, it may hurt people that carry balances on credit cards, the new models.
Oh, yeah?
Yeah. Because it's going to count trended data.
Yeah.
Where it doesn't count, these models don't count trended data. So it will see people, and it'll hurt people that carry balances.
Yeah. What's the time frame on that potentially?
I think we're looking at 2025. They're still tweaking it and coming up with the exact way they're going to do it. So. Yeah. The other big topic that I thought, Ben, we might want to talk about is this: the credit bureau selling our inquiries. So.
It's gotten worse, right?
Yeah, so
it's not just me.
Yeah, I mean, when I worked for an affiliate credit bureau, we had the ability to sell lists. We could say, "Hey, Experian, this mortgage company wants to buy a list of all the folks in 23452 that have a VA mortgage with an interest rate over 5%, so that we can send them mailers to refi them." You could get that specific with a list. Now, as you know, every mortgage inquiry can get sold to lenders all over the country. I had someone right here down the hallway tell me that when they pulled credit, they got 30 calls that night, the buyer, from lenders all over the place. So there is a way to stop it, and we have lots of marketing material around that. Optoutprescreen.com is the website everyone should go to, and that it stops the bureaus from selling our information. Most of the junk mail stops because you're not getting those pre-approval letters, and so it's an added benefit. But the problem is it takes 5 days to hit.
Right.
So I've been preaching in my realtor classes.
It starts with the realtor, absolutely.
And we had I did a class in Richmond, and the broker there is putting our flyer in her welcome package to the buyers. Hey, you should opt out early on so that you don't get hounded by people. Your junk mail will stop, and there's benefits to doing it.
Yeah.
So hopefully, we can get more people to do that before they get to us, before we pull it.
Optoutprescreen.com.
You got it.
Yeah. Awesome. Well, Mike, thanks for coming out and spending some time to talk to me.
Appreciate you having me, Ben.
We've got to get another continuing education class rolling.
Let's do it.
I never hear anything but good things anytime we do it.
I appreciate it.
There's a lot of good information there. That
I have another one coming up down here in Virginia Beach on August 7th, I believe, is the next one scheduled.
Awesome.
And I'm doing one in Elizabeth City in September. So I have a few more planned already, but yeah, I got some spots open.
Awesome. Got to get you on the schedule.
All right. Thanks,
Mike,
man.
thanks for stopping by.
You got it. Have a great one.